Monish Pabrai's The Dhandho Investor, the low-risk value method to high returns presents an accessible yet profound guide to investment strategies rooted in minimizing risk while maximizing returns. The book revolves around the business and investment principles of the Gujarati Patels, an Indian immigrant community in the United States, who built significant wealth despite starting with limited resources. The term Dhandho means business in Gujarati, and Pabrai uses it as a framework to illustrate how anyone can achieve financial success by making calculated decisions that involve low risk but offer high returns. The Patel case study, a model of Dhandho thinking. Pabrai opens the book with a detailed narrative about the Patel community. When many Patels immigrated to the United States, they faced cultural and financial hurdles. However, they recognized a unique opportunity in the motel industry. With modest capital, often pooled from family resources, and a willingness to take on operational roles, the Patels began purchasing distressed motels at bargain prices. These properties were often located in stable, recession-resistant locations, ensuring steady cash flow. Their approach was practical and shrewd. By living on-site, reducing overhead costs, and offering hands-on management, the Patels maximized profitability while minimizing expenses. Even in economic downturns, their business model thrived because budget motels catered to customers who prioritized affordability. The Patel story embodies the essence of heads, I win, tails, I don't lose much, the core philosophy of Dhandho. Dhandho principles in action. Pabrai extrapolates these lessons into a set of principles for investors. He emphasizes that wealth is built by identifying asymmetric risk-reward opportunities, where the potential upside is significantly greater than the downside. This concept forms the foundation of the Dhandho philosophy, which Pabrai translates into actionable guidelines for value investing. 1. Invest in distressed assets. Just as the Patels bought motels at discounted prices during periods of financial stress, investors should look for undervalued companies whose stocks are temporarily depressed. Market inefficiencies and emotional reactions often create these opportunities. 2. Seek steady cash flow. Cash flow is the lifeblood of any business. Investments in businesses with predictable and consistent revenue streams provide stability and reduce the likelihood of failure. 3. Focus on moats. A moat, in Pabrai's terms, represents a company's competitive advantage. This could include brand loyalty, cost efficiency, or proprietary technology that protects the business from competitors. Companies with strong moats are better positioned to withstand market pressures. 4. Limit the downside. The key to Dhandho investing is ensuring that potential losses are minimal. This is achieved by investing in companies with solid fundamentals, low debt, and a clear path to recovery if challenges arise. The psychology of investing. Pabrai delves into the psychological barriers that prevent many people from adopting the Dhandho approach. Fear and greed often drive market behavior, leading investors to make irrational decisions. The Dhandho framework advocates for a disciplined and rational approach, focusing on intrinsic value rather than market speculation. Investors are encouraged to cultivate patience, waiting for the right opportunities to emerge. Unlike day trading or speculative investments, Dhandho investing involves thorough research and the willingness to act decisively when the odds are overwhelmingly favorable. This requires a mindset shift from short-term gains to long-term wealth creation. Concentration versus diversification. One of Pabrai's more controversial stances is his critique of excessive diversification. He argues that spreading investments across too many assets dilutes potential returns and reflects a lack of confidence in one's research. Instead, Pabrai advocates for concentrating investments in a handful of well-understood opportunities. By placing big bets, infrequently, investors can maximize their chances of achieving high returns. This principle ties back to the Patel strategy. They didn't invest in multiple industries or ventures but concentrated their efforts on the motel business, which they understood deeply. Their focus allowed them to optimize operations and scale their success. The role of market cycles. Patel highlights the importance of market cycles in creating investment opportunities. During periods of economic turmoil, high-quality assets often become undervalued due to widespread fear. Investors who adopt a contrarian approach, buying when others are selling, can achieve significant returns as the market recovers. Patel advises remaining calm during market volatility and using it as an opportunity to acquire assets at discounted prices. The art of holding investments. Patience is a recurring theme in the Dhandho Investor. Patel advises against frequent buying and selling, which erodes returns through transaction costs and taxes. Instead, he encourages investors to hold on to their investments until they reach their full intrinsic value. This long-term perspective aligns with Warren Buffett's philosophy of treating stock investments as partial ownership in businesses. Practical tools for Dhandho investing. To help readers apply the Dhandho principles, Patel provides a series of practical tools and techniques. These include margin of safety. Always invest with a buffer, ensuring that the asset's market price is significantly below its intrinsic value. This reduces risk and increases the likelihood of high returns. Checklist approach. Develop a checklist of criteria to evaluate potential investments. This ensures consistency and reduces the risk of overlooking critical factors. Learning from mistakes. Analyze past investment failures to identify patterns and avoid repeating them. Mistakes are invaluable teachers when approached with the right mindset. Real-world examples and case studies. Throughout the book, Patel includes real-world examples to illustrate his points. He references his own investment fund, the Patel Investment Funds, which has consistently outperformed the market by following the Dhandho principles. He also draws lessons from iconic investors like Warren Buffett and Charlie Munger, who have built their wealth by focusing on value investing and long-term growth. Patel's case studies demonstrate how investors can identify opportunities in diverse industries, from technology to consumer goods. These examples provide a blueprint for applying the Dhandho framework across various sectors and market conditions. Conclusion: the essence of Dhandho. The Dhandho Investor is more than an investment guide, it's a philosophy for building wealth through simplicity, patience, and discipline. Patel distills complex financial concepts into an approachable narrative, making the book suitable for beginners and experienced investors alike. By focusing on minimizing risk, leveraging market inefficiencies, and adopting a long-term perspective, readers can emulate the success of the Patel community in other value investors. The book's enduring message is that wealth creation doesn't require extraordinary skill or resources. Instead, it demands a willingness to think differently, act decisively, and stay committed to fundamental principles. In the spirit of Dhandho, the path to financial success lies in making prudent, calculated choices that prioritize safety while maximizing potential rewards.